Oh, guys, that's so cool. Look what came in the mail yesterday. We got the George W. and the Gorilla Gang mugs. Oh, baby. I can't get enough of that. That is so freaking cool. What a wonderful world. What is up, everybody? Welcome to Trey's Trades. We get technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, my friends, are going to be covering 5 stocks that I bought on the dip, baby. Buy the dips, sell the rips. That is how we rock and roll over here at Trey's Trades, and I'm really excited to talk about this here today. So, we're going to run through the basic fundamentals of these 5 companies. By looking at the title, you know that I'm going to be talking about Microvision, AMC, XONE, SENS and UAMY. So, I will have a video on AMC specifically later in the day, but we've got quite a bit to cover here, so let's get into the video. We're going to look at the fundamentals of the company, as well as the technical analysis setup, why I decided to buy here today, and why I might buy more if this does continue to bleed. I'll tell you what, if we've got a bear market coming up, we're going to be ready to rock. So, number 1 on this list is my girl, MVIS. Oh, Microvision, ticker symbol MVIS. This is a stock that I have absolute conviction in. I purchased, let me just say a quick peek over here today. I purchased what would be 74 total shares. So in my Webull account, this is the first time that I have bought into Microvision. That came out to about $1,230. My total position in Microvision comes out to just a little under $10,000. This is the stock that I have the utmost conviction in of any stock in the market. And I just want to read you off a little bit of what they do here real quick. They're an industry company focused on technology equipment, and electronic equipment and part. So, I'm going to pull up their website here for you really quick, and I'm going to show you why I like these guys so much. To me, this is the company that sells the pickaxe to the coal miners. They've got a lot of different technology. In a lot of ways, I view them kind of similarly to Tesla, not in the sense of what they do, but in the sense that they're very diverse in the products that they offer to the general public. They have a lot of products they offer to the market. So you can see that they've got a bunch of different intellectual property, including capital equipment, advanced manufacturing, optomechanical design, MEMS design, systems design, hardware design, silicon design, source coding, and patents. Patents are awesome because they're a guaranteed way to generate revenue every single year, year over year. And if you need to liquidize one of these patents, you have cash that you can sit on in order to, fund future operations. So I like that. None of this stuff gets me super excited, but it is good to see because these are basically intricacies and accessories that help them do what they need to do down the road. If you've got a projection engine and an interactive projection engine, which are absolutely cool platforms. The interactive projection engine is like a tablet that you can display right onto your countertop, play Candy Crush or bake a pizza and, scroll through a recipe guide, which is really cool. They've got a consumer 3D LiDAR sensor. The LiDAR specifically is what I think has a large future in the market. So this is great for smart home applications, security, automation. It's very adaptable, low latency, right? They've got the projection engine for head-mounted displays that they actually have a DoD contract, Department of Defense contract with, that is tied to the aviation sector of the Army. Anytime that you see a government entity buy into a company or have a contract with a company, this one specifically was a while back, but it was worth $2 billion. Anytime that you see a contract like that, that's a big deal because there's usually a lot of money tied with a Department of Defense or government-fueled agency buying into a company. So that's absolutely beautiful. They've got another contract potentially in the works for infantrymen, armormen, field artillery guys, air defense artillery guys, right, which actually influence my line of work, which is very cool to see. This would include AR, MR, and VR. So I think AR and VR has a lot of potential for the future. Somebody over my Discord, Yandy, shout out to Yandy, works with this kind of AR and VR stuff, and she gets just as excited as I do looking at Microvision. I've got nothing but good things to say. And then we've got the automotive 3D LiDAR sensor, which we're expecting a presentation on sometime in April. Now, if this goes well, they're going to be a potential company for a buyout or acquisition deal with companies such as Microsoft, Apple, or Ford, all 3 of which are looking to get in the autonomous vehicle game. I think that this is an extremely strong long-term potential company. I would say at least until something fundamentally changes, they decide to shift gears, right? For the next 3, 4, 5 years, as long as the autonomous vehicle and electric vehicle game, the green energy sector, continues to boom, especially with Joe Biden in office, right? Microvision will continue to do well. And if this buyout happens, it's a very lucrative process, my friends. You would receive a cut per $1 billion in acquisition. Let's just hypothetically say you'd receive $7 per $1 billion in acquisition. If you had a $10 billion buyout, you'd receive $70 per share. Of course, that number is going to be agreed upon by both parties, right? Both companies will decide exactly what they're going to pay out for this deal. But if the automotive LiDAR presentation goes well, Microvision will be able to negotiate very, very well what they want here out of the company. So I've got nothing but good things to say. We're getting day by day closer to that overall automotive LiDAR presentation, looking absolutely beautiful. If we look at their financial situation, their annual, right, we're going to compare 2019 to 2018. I think the 2 important numbers to look at here are going to be the total revenue and then the gross profit. So if we look at the total revenue, they generated about $8.89 million in 2019 compared to 2018. So they were down about about 49.53%, which means their gross profit was also down about 95%. Now, what is this reasoning, right? Why were the numbers down? My hypothesis, anticipation, of course, next time we've got earnings, I'm going to listen in on this and see what we're looking at. But my hypothesis is that all of the money, that they had been generating, they instead shifted their focus into this automotive LiDAR, essentially to double down on what they think is going to really generate them revenue down the road. So I would anticipate that you're going to see these numbers start to increase slowly over time. And if we look at the quarterly numbers, these are also, a little bit different. So we've got Q2 and Q3. We actually saw an increase in Q3 compared to Q2 in total revenue. And gross profit, they had $639,000. So they're actually profitable compared to Q2. So that is, an important factor to consider. They actually did grow over Q2 to Q3. Q4 earnings should be coming out here relatively soon. If we look at the options, we've got quite a few call options on Microvision. We've got some $30 calls expiring on 19 March 2021. So there are quite a few people that are anticipating this is going to have a nasty run as compared to the puts, right? Options are great because it's a way that you can predict upcoming price action. The puts are not quite as heavy. We've got quite a few puts in that, $15 and less range. I don't anticipate it dropping down to $10. I think that's a little steep. I don't see that happening personally. But if we just look at these guys, this is looking absolutely beautiful. A lot of people think it's going to be bullish. There's a lot of bullish movement happening here with Microvision. And we had a nasty dip today, my friends. The NASDAQ, SPY, I believe the Dow were all down like 3% today at market open. Had a nice bounce towards the end of the day. However, I took opportunity to buy into this, and I know some others at the Discord did as well. Hopefully you're able to catch my video and buy on some of these dips as well, and take an advantage of that, right? So we had a nasty dip here. Came down to about $13.89. I bought two different positions here. I bought in, let me just take a quick peek at my filled orders. I bought in at what would have been $15 for 40 shares, and then at $14.03 for 34 shares. So improved my position. I'm absolutely happy with that 74 shares that I bought in here with today, and I think it is going to treat me well down the road. Of course, you guys have to do your own due diligence. I present these plays to you and the analysis, the fundamental analysis, and the technical analysis, so you can decide whether this is something you want to look into more. Don't buy into this just because I buy into this, my friends. This is an opportunity for us to learn together, right? Because I'm always learning. You guys should always be learning. As investors, we're always trying to improve our game, right? But this is the company that I have the utmost conviction in out of all the stocks in my portfolio. If we look at the technical analysis, as things are sitting right now, it's very nice. I don't mind this. I don't mind this in the least bit. And I'll tell you why. We've got nice consistent volume, which is a sign that the stock will be predictable. We should have nice clean movements. It's not going to be super volatile. It shouldn't be gut-wrenching by any means. Now, the Microvision was not down too bad in comparison to some other stocks in the market. I think at the worst point, it was down about 7% here today, which is not terrible when you consider some stocks are down 20, 30, 40%. I think that CCIV got absolutely schwacked. CCIV took a big dump. I mean, they had the news announcement that played into things a little bit, but nonetheless, Microvision held up pretty well, and they're actually up here in the after hours. So that's looking very solid. I'm happy about that. If you're looking at the technical analysis, we had a double bottom here at that 30 on the RSI. Currently sitting at 43. It's starting to get a little bit of momentum back here. So I would personally anticipate that you are likely going to see a bottom here. And I find that likely because we've got a huge candle wick right here. And if we just look at this in a macroscopic perspective, right? That huge candle wick, that hammer candle, is typically an indicator of a bottom out. We had some price rejection, right? People took the opportunity to scoop up those shares. I don't think this bearish market or this correction that we're seeing is going to be like a 1 month correction. It's possible, right? We want to be ready for the worst case scenario, but I think it's going to be, somewhere between a week to 2 weeks or so. And it's just an opportunity for us to buy these dips. And that's what we're going to do here with Microvision. As it's sitting right now, the technical setup does look like 1527 is a pretty solid bottom. If we end up dropping beneath that, where's the next bottom out going to be? Well, it is likely going to be right around here at about 1376. And I'll tell you what, if it drops down to 1376, I'm going to buy another 100 shares, without a doubt. There's not a doubt in my mind that I will scoop up that opportunity because I personally believe Microvision is going to be an $80 to $100 stock at the end of 2021, especially if their automotive LiDAR presentation goes well. And that is without an acquisition possibility. So that is looking absolutely beautiful. We've got the 15 MA that just crossed underneath the 200 MA. We're back in some bearish territory. They are hooking away from each other, which typically indicates an upcoming increase in volatility. However, we do have, if you combine these candles, pretty much a two lows high close. So if this was one candle right here, it would be a high open, a low close, followed by a low open and a high close. If you were to combine those into two candles, that typically is an indicator of an upcoming reversal. That's a bottom out. That's a sign of weak selling pressure and strong buying pressure. So people took the opportunity to eat up those people that sold out of the market. So take that for what it is. I feel pretty comfortable about Microvision. I hope you guys are able to buy into the dip today. If you enjoyed this company, and I will be holding this for the long term, for many, many years down the road, I've got nothing but good things to say about them. AMC, this is a company that I also bought on the dip, and I am so pumped about. Oh, this has been going nuts. This has been going to Chinatown, baby. AMC is finally back on the move, and the volume is starting to pick up. Now, I'm not going to get into this in extreme detail, just because I have a video that's going to be talking about AMC here later tonight, but if you want to check that out, feel free to do so. AMC is a stock that I think has some really good midterm potential. And all of these dip opportunities, right? I didn't even dip that hard, but it did dip here right away in the pre-market, down to about 633. I took the opportunity to buy into that dip and take advantage of those lower prices, because I do believe that AMC, whether it's a squeeze, whether it's an acquisition, whether it's a midterm play, right? We're waiting until COVID recovery and quarantine opens back up again, right? I think AMC is going to be a $15 to $20 stock, worst case scenario. Honestly, I think 25 is also possible, especially because they generated a pretty decent amount of cash with some offerings that they had done, right? They generated about $700 million after taxes and fees, which is enough money for them to continue operations, according to the CEO, until the end of 2021. In his own words, he said, bankruptcy is off the table. So I think these guys are set up very well. We did have New York that just recently reopened to 25% capacity for all movie theaters, AMC chain included, obviously, to start opening up those movies again and showing some films. So that's going to be huge. It's going to be an opportunity for them to start generating that revenue, so they can start generating some gross profit, right? If we just look at the financial situation, the annual financial situation here real quick, we can look at 2019, 2018, and 2017, and they were actually growing. For the last 4 years, this company has been growing, yet it's been getting schwacked, right? That is mind-blowing to me. That, to me, tells me this company is a little bit undervalued. And I know there are going to be people out there that disagree with this, but you can't argue with numbers. Check this out. 2016, 17, 18, 19, you have seen an increase in overall revenue. 9%, 56%, 7%, and 0.19%. Even through quarantine. 2019, they were a more profitable company. Now, I would imagine that 2020, obviously, is going to be a little more red, right? So take that into consideration with COVID that happened, right? They didn't have movie theaters open. However, I don't think this is going to be a bad thing for AMC, right? These numbers are not bad in the least bit. So they have been growing, right? We had the pandemic that shut things back down. I think they're going to get back on that growth projection. I'm not mad about it in the least bit. We look at the, Q1, Q2, and Q3 of 2020, and they were a little bit red. However, if we look at Q3 compared to Q2, they have a pretty decent amount of revenue. They're up from 18 million to about 119 million. We look at the gross profit. They had nice margins. They kept a large amount of their total revenue. Their cost of revenue is only $35 million, which is not bad. That's a pretty tight margin. That's a pretty tight margin for sure. And even though it's red right here, they improved from the previous quarter exponentially. I think that's something like 6 times as much total revenue and probably about 5 times as much gross profit. So very solid numbers. I'm not mad about that in the least bit, to say the least. That looks very, very solid. So I definitely took the opportunity to buy on the dip here. I'm not going to give you guys a price target for a squeeze or for an acquisition, as nobody can tell you that, right? But what I can say is that AMC is a stock that I definitely took the opportunity to buy the dip on. And if you were part of the Gorilla Gang, if you were holding strong, if you've got, I hate saying it, but the diamond hands, baby, you want to get those bananas, AMC is going to be a stock that I think has some great potential. XONE, this is another company that I took the opportunity to buy the dip on, because this stock has been running like you would not believe. If we look at this on a 1-month chart, check this out. This company was worth $9 per share in what would have been January 4th of 2021. They capped out at $66. Let me tell you why I think they've got some solid potential. We're going to pull up their website here really quick. XONE is a metal and sand 3D printing company. Very similar to Nano Dimensions. The difference being the Nano Dimensions focuses on technology 3D printing, right? So the processing of like chips, electronics, prototyping, custom manufacturing projects, right? So, I would say XONE is similar, but they focus on more industrial, customers. So they focus on industrial goods, machinery, equipment, and components, industrial machinery and equipment, right? So if we just check out their website here really quick, we're going to show you their metal and 3D printers and why I think they've got some solid potential long term. That is hurting my eye. You guys will have to excuse me. I've got anterior uveitis that flared back up here again. You can probably see it. My eye's pretty red, but I'll be all right. As a world leader in binder jetting systems for more than 20 years, XONE's innovative metal 3D printers simply deliver more. That includes industry-leading accuracy, density, and critical part-to-part repeatability. Our metal 3D printers quickly and sustainably transform more than 10 single alloy metals from 17.4 pH and 316L to Inconel 718 M2. That's a bunch of fancy talk, but essentially they're just talking about the specs of these printers, right? And it is very cool stuff. And I want to show you an example of, these 3D metal printers and what they can do. We have a DoD contract that is actually in the works with this company. So if we just Google here really quick, XONE DoD contract. I'm just going to show you exactly what I'm talking about. So XONE received a $1.6 million DoD contract for mobile 3D printing factory. Essentially what these guys want, the DoD, what they're looking for is a trailer-sized, portable, transportable, essentially factory that is going to be able to 3D print different machinery and industrial goods that the Army would be able to utilize, right? So this could be something as simple as replacing a pin on an M16 that got lost, or maybe they need to craft the shelling and the cast for a mine, right? That's possible. They can definitely do that. Maybe they need to replace a part on a Bradley, right? Maybe they need to do that. Maybe they need to replace a part on a Patriot system. They can do that too. That is a huge money saver because you're taking out a part of the process, essentially, of the retail worker. You don't need somebody to create it because the machine is going to do it, A, for cheaper, and B, with less room for error. So that is very solid. They've got that metal 3D printing system, which the DoD has the most interest in. I also have the most interest in that, but the sand 3D printer system is also pretty cool as well. So look at this. It covers the full range of 3D sand printing from prototyping to serial production and is able to process all XONE binder systems. It is available at a standalone solution, but is also scalable and can be connected by a network that creates a fully automated production line to realize the industrial serial production in 3D sand printing. They've got a couple different specs here, right? You've got the S Max, the S Print, the S Max Pro. I think all these have some very solid long-term potential, but I'm the most interested in this metal 3D printing lab. If we just take a peek at this, I think that is a really cool system, the Innovent Pro 3L. It's the world's most advanced entry-level model for metal binder jetting. You can see it's got a little screen here that you can have the specs up on, right? So you're gonna have two kind of situations here. You're gonna have the printer, which is gonna print out these metal, ideals, and then you're gonna have somebody that's drawing up the metal, right? So someone that understands computer programming pretty well, essentially just creates the specs, and then this does all the work. So you're taking out a huge cost issue here, and this is gonna be on the radar of, I think, a lot of industrial companies. Right, so I think moving forward, technology is really going to be a move, which is why I think Nano Dimensions is doing everything right. I think Nano Dimensions is going to end up being an XONE of the future, but I don't think industrial goods are going to go anywhere. That's always going to be a need for industrial working, and we do know that the future, as it is right now, whether you agree with it or not, is machinery replacing humans in industrial working situations, right? There's a shift in demand in the market. We're relying less and less on people to create products and more on machines to create products. So this is going to come into play, and I don't see any reason why this isn't going to continue to grow. And furthermore, if we look at their financial situation, we're just going to take a quick peek at the numbers and where the potential for growth is here. So 2019 was red. We were down about 17% from 2018 at $53.28 million of total revenue. This is all the cash that they generated, and they didn't necessarily get to keep all that, right? That's just their total revenue. Their cost of revenue here was $35.7 million, which meant that their total gross profit, the money they took home, was $17.57 million. Now, that's a pretty high cost of revenue. What is the reasoning for that? Well, we've got marketing and administrative expenses as well as R&D being very large numbers. So I think that a large portion of this cost of revenue here is coming from that marketing and administrative expenses and research and development cost. So I think once they get down the road and they really lock in these products that they want to give to the public, right, that number is going to go down and their margin is going to go up, right? They're going to keep more of that total revenue and lock in more gross profit. Furthermore, if we look at their quarterly revenues, right, their Q1, Q2, Q3 of 2020, what can we see here? Well, Q2 was a little bit rough, but they have been growing nonetheless. So Q3 compared to Q2 was up 59% in total revenue, right? $17.4 million. And if we look at their gross profit, $3.9 million. Cost of revenue is pretty high, right? So the production of these products is expensive. They're spending a lot of money on the production. They're spending a decent amount of money on marketing and administrative expenses, R&D. This is an early stage company in my eyes, right? So you're investing essentially here in the belief, I would say similar to Tesla, that they're going to be able to decrease the cost of producing these machines as they get more efficient, right? And furthermore, grow down the road. So that should be pretty solid. I've got a lot of conviction in XONE. This is a stock that I'm going to continue to add a position to. This is a long-term stock for me. I took a huge opportunity here with this dip. I hope that people out there that believe in this company were able to do the same. But we're just going to look at the technical setup here really quick and see how this is looking. So as far as the technical setup goes, we have very nice, consistent volume. A lot of nice green days, and I would say something that's very interesting is on these red days, there's not a lot of volume coming out of this. This was the only exception. There's a little bit of an asterisk right here, right? Pretty decent amount of red volume that came out of the stock on what would have been February 10th. But it bounced very nicely. We have got some long candle wicks here indicating weak selling presence. And furthermore, today we had a similar movement to Microvision where we've got this huge hammer candle or a shooting star, which typically indicates weak selling pressure, meaning this very well could be the bottom. Of course, it might not be. We cannot predict the market to a T. If we could, we'd be long in all the right stocks every single day of the week. But what are we going to be looking at if this is not the bottom? $29.21. This ends up coming pretty close to where we bottomed out here today. We bottomed out about $31.50, had that price rejection, came back up here. The market was nasty, as I mentioned earlier here in the video. But I think that we're pretty likely to see this be the bottom because if you were to combine these candles, right, we're looking at a two lows, high close. If you were to combine these red candles and these green candles, what you would have is a high open, low close, followed by a low open, high close. Essentially bringing back all the losses that we accrued throughout the day, basically breaking even. So that's solid. I don't mind that in the least bit. In terms of the 15 MA and the 200 EMA, we had the 15 MA cross underneath the 200 EMA right here. They're hooking away from each other, which usually indicates an increase in volatility, right? So I would anticipate some pretty volatile movements here in the next couple of days, as we have been seeing. You know, once this 15 MA hooked away from the 200 EMA, we did see some volatility. There was a lot of harsh moves. I think at the worst point here today, it was down like 10% or something like that, which is a pretty large margin of of difference considering, you know, we ended up almost green today on XONE. So that is, I definitely took the opportunity to buy into this here today. My total position is now 51 shares, as you can see, and it comes out to a market value of $2,065, currently down about 3.48% or $75. But I'm not sweating that in the least bit because I'm going to continue to add to my position here in XONE. I think they've got nothing but good things coming for them. Next is going to be SENS Stock is a company that I have a lot of conviction in, my friends. This is a stock that I think is going to absolutely smash over the next couple of years, especially because the need, and this is what is critical to me, is the need for diabetics to monitor their glucose levels until we can find a cure for diabetes, which who knows if that will ever happen, right, is never going to go away. In fact, the demand is only going to continue to increase as the population across the world goes up, the population in the United States goes up, and obesity rates continue to go up. Typically, obesity and diabetes are very closely tied together. Of course, there are situations in, scenarios in which that's not the case, and some people just have diabetes regardless, whether it be, family history, etc. But nonetheless, diabetics are continuing to grow. And what we have here with SENS is a healthcare, pharmaceuticals, and medical research, biotechnology and medical research company that focuses on monitoring glucose levels, which is a life or death situation for certain people, right? Which is why I think that Dexcom is such an expensive stock. It is a life or death situation for some people. Dexcom is the competitor to SENS. They're trading at $406 right now. If we were to look at their current financial situation, we're going to get into this here a little bit more, but they generate a lot of revenue. They generated in 2020 $1.93 billion. Their gross profit was $1.3 billion. So a very tight margin there in terms of overall growth. And if we look at SENS, they've got some room to improve, right? They're not generating anywhere near that much in numbers, but I think it's possible that they will. In this scenario, you're investing in, the anticipation that they're going to be able to capitalize on that market and have a little bit of a shift in demand in terms of, people moving over to the SENS EverSense system, which we'll get into here in a minute. But nonetheless, their numbers have been improving year over year over year over year. This is exactly what you're looking for in terms of an income statement. 2016, they're up 773%, up 1,800%, up 196%, up 12%. Quarterly, down a little bit, right? So this last year, they have been a little more red. But nonetheless, they have been growing, Q2, Q3, Q1, Q2, Q3. We're expecting earnings to come out for Q4 relatively soon here, which should be a pretty solid catalyst to start moving the price in a nice upward direction. So if we look at EverSense, what is their product? Why do I see such upside in the EverSense system and the SENS system? So check this out. It's the world's only long-term CGM system. With the EverSense 90-day CGM system, you can actively manage your diabetes simply and with confidence. EverSense provides continuous blood glucose monitoring for up to 90 days via an under-the-skin sensor, a removable and rechargeable smart transmitter, and a convenient app for real-time diabetes monitoring and management. They've got the sensor, which is subcutaneously inserted into the skin. They've got the transmitter here, which would give the information information over to your mobile app and device and would give you the information that you need to know. It's nice because it sends data every 5 minutes. If you don't have your mobile device on you, it will give you vibratory alerts from the sensor, which would tell you that you need to monitor your glucose levels when they need monitoring, right? And it's finger prick free. Now, that's not any different than the Dexcom system, right? The Dexcom system, they have a CGM system as well. However, their system only monitors for 10 days. And ever since his current FDA-approved system monitors for 90. Even further more than that, right? They have a 180-day system that they're actually awaiting FDA approval on. And if that gets pushed, my friends, you're going to see a nasty, nasty run here for the SENS company, SENS Onyx. And even beyond that, right, the cherry on top of the icing on top of the nasty, filthy cake is they have a 360-day CGM system they are working on. I don't think that's going to be approved anytime within the next, 1, 2, 3 months, but we are anticipating that the 180-day CGM system will get approved sometime in the next, 1 or 2 months. It was anticipated that they would release it in the early part of 2021. We are, in fact, at the early part of 2021. So I don't mind that setup at all, my friends. I think if you have a transferring of wealth from Dexcom over to the SENS system, you can see a very nice push in SENS Onyx. So I love this stock. I will continue to add to this stock as often as I can. In my other portfolio, I have about $2,000 of SENS Onyx. In this portfolio, I have a call option, which isn't doing too well right now since there was some red days here. I've got 4 call options at the 5.5 strike, but I have $1,280 of SENS Onyx here today. Actually up about 12% on that. I bought it at a really good time. I was able to buy it when it was trading at, what's my average cost here? Average cost being $3.42, and I got my order filled when it was, let me just take a quick peek here. Not quite saying. So it's not saying what it filled at, but that is my average cost, $3.42. I believe it was somewhere around $3.30. So I got it at a great price. Very, very satisfied with that. And I'm going to continue to hold that. This is a long-term stock for me. I think 1 year from now, I would not be surprised to see this at $80 to $100 if they get approval on that 180-day CGM system. And guys, in the next 1 or 2 years, if they get approval on the 360-day system, I think you're going to see a huge push and transition over to SENS Onyx. I think you're going to see that income statement monumentally improve. It should be a solid grand slam hit for this stock. So what is the technical setup looking like right now? These guys got butchered. They got slammed when the market went red in the pre-market. They had a disgusting gap down. We've got a little bit of a gap here in price action, which typically when you see a gap like this, you end up filling it, especially if when the gap happens, you have immediate green. So I'd anticipate because of that gap down and followed up by immediate green, we've got these 2 hammer candles, right? These 2 shooting stars. We've got these, this 2 lows, high close if you were to combine these candlesticks, right? Essentially just a double bottom. That typically indicates to you that there's a lot of buying presence, and I would be surprised to see this dip below 333. I think we're going to end up seeing a green day on this. We have the 15 MA and the 200 MA hooking in towards each other, which typically indicates an upcoming decrease in volatility, right? If they're hooking in, that indicates a decrease in volatility. If they're hooking out, that indicates a increase in volatility, right? But nonetheless, the 15 MA is underneath the 200 MA, so this is right now I'm bearish territory as I was. So take that for what it is. I don't think that's going to last very long here. In fact, if you're looking to establish a position in this for a swing trade, what you're going to be looking for over the next 1 or 2 days is for that 15 MA to cross back up over the 200 EMA. And I would anticipate pretty highly that you're going to see that 15 MA cross back over the 200 EMA. So that could be pretty freaking solid, my friends. In terms of volume, we had an increase in volume back here on what would have been February 5th. And with that increase in volume came an increase in volatility. Volume drives volatility, and volatility helps drive those higher price valuations. And what I like a lot is the volume has stayed. It stayed around. And furthermore, on these red days, we haven't been seeing anywhere near as much red volume, right? So a lot of green volume coming into this. We typically see a lot at market open. The only day that we saw a lot of red volume was, I would say, right here. So that's a little bit of an asterisk. That's a day where we might have had some people take losses, take profits, etc. But nonetheless, I think people are still holding their positions in this stock. And I think a lot of people took the opportunity to buy this at such a huge discount this morning. I mean, we saw 36 million total volume in that 1 hour time frame. So that looks beautiful, my friends. If I had to take a guess, at an entry point for this, I think a solid entry point is going to be somewhere around $3.51. So that levels off as a good level of support. We've got 1, 2, 3, 4, 5, 6 different touch points here. That should treat you guys pretty well. I would add to my position if it dropped below 351, 351, 333. If you see it at 333, that is going to be a beautiful, beautiful entry point. And I honestly don't see it dropping below that. I think you're going to end up seeing, probably a slow gain day tomorrow, probably a little bit of consolidation, worst case scenario, but we will see. If we end up entering this bear market, which is, kind of being tossed around here a little bit, you might see it drop down a little bit more, in which case we will update you. But I will not be selling. I will only be adding to my position in this company as time progresses. Last stock we're going to be looking at here is UAMY. UAMY. This is an antimony company. It's kind of got a double-edged sword here in a good way. I shouldn't have said double-edged sword, but it's got a double sword here because it is a rare earth metal company, and it is also tied to the electric vehicle and the green energy sector, right? Because antimony is a material that is used in batteries for electric vehicles, right? It's an important factor because there's not a lot of rare earth metal companies that mine antimony in the U.S. In fact, I think U.S. Antimony is the only company in the U.S. that mines this material. And B, you are seeing that China might end up cutting off export of rare earth metals to the U.S. If this ends up happening, right, that's going to increase the demand of antimony products. And if U.S. Antimony is the only company that provides these products, right, that is going to really, really drive the demand of this stock and of this price. And my friends, my family, to me, this is a stock that we were beating the hype on. I've been talking about UAMY for probably about a month here. This is a stock that I started talking about for the first time when it was trading at, I would say, probably about 60 or 70 cents. I've got it in my last video if you want to go check that out. I don't remember off the top of my head. But we've been talking about this for a minute. Actually, I can just check this out here real quick. So we talked about UAMY for the first time when it was trading at 84 cents. So we're up 203% if you bought into that for the first time back then. And I've got nothing but good things to say about this. I think it's going to continue to grow. If we look at what they do, right, we're just going to pull up this little piece right here. There's potential that they're going to sign a contract with AMBRI. What is AMBRI, right? So we're going to pull this up here really quick for you. AMBRI is a company that is invested in by Bill Gates. And this is important to consider because AMBRI is going to, I've got a video out on it. Give me 1 second to find it. All right, so check this out. It's a liquid battery play that, in my opinion, has potential for $3 near term and will be keeping some shares long term for sure. Bill Gates is an investor in the storage battery company AMBRI. So AMBRI is a storage battery company that will potentially be supplying antimony to. In quotations, this is from a release that they did. Additionally, U.S. Antimony is pleased to announce that it signed a non-binding letter of interest regarding the potential supply of antimony with AMBRI, a company that utilizes antimony in its novel off-grid storage batteries. They haven't dropped any PR on this yet, and I still don't think that they have. UAMY is invested in by Bill Gates. Offering closes Tuesday, which already happened. They had a lot of cash from that. This news is only in the 8K filing, so when they PR this, I think we're going to see a little bit of a push, and I think that is the case as well, because not a lot of people have been talking about this. This is kind of under the radar in terms of that antimony play. If you look at their financial situation, it hasn't been great. This is a company that you are going to be investing in the potential for growth and not necessarily the previous growth, right? So the green energy sector, the antimony play, right? This company's been around for a pretty long freaking time. So basically what you're looking into here is a change in, company values. Microvision is another example of this. Microvision has been around since, I think, the late 90s, and they were doing a lot of nothing for a very long time. So if you look at Microvision here on a maximum chart, you can see there was a long time where they did not do basically anything, right? They were pretty much, I wouldn't say worthless as a company, but not doing any sort of movement, right? And they had a shift in focus. They started focusing more on that LiDAR. They started focusing on some different technology. UAMY, to me, is a similar play. UAMY is a stock to me that I think is going to be able to really make a transition here. And you can see they used to be worth quite a bit more than they are right now. And looking at this, my friends, this should catch your eye. Look at that volume. Look at that crazy increase in volume. This is finally starting to get some attention here. People are really starting to pay attention to AMBRI. Or not AMBRI, UAMY. So that's significant, my friends. That looks absolutely monumental. I see no reason to believe that this can't do something very nice here. And it is starting to get some attention. Financial sheets, the income statements, right? As I mentioned, they're not great. We're looking at a company for potential for growth, not previous proven growth. You'd be looking at, more of an XONE if you're looking for that previous growth to give you more of a security. So there's a little bit of risk involved here with UAMY, especially because they did have an SEC violation in terms of a direct offering that they did. So take that into consideration. I always want to be as transparent with you guys as I possibly can. But I think there's a lot of potential here with UAMY. They've got that antimony. It's a rare earth metal play, right? We've got China that is considering cutting off that rare earth metal play. Rare earth metal transportation to the United States. We've got that possible deal, that non-binding letter of interest with AMBRI, right? So they have a customer that's going to be generating revenue, which is going to translate into gross profit, which is going to lead into more investors stepping into this stock. So I think there's some very solid upside. For me right now, this is going to be a midterm play. I want to see how things play out a little bit more here down the road. But if things go to plan, if we do get that contract between AMBRI and UAMY, that could be pretty solid. I have heard rumors about the DoD signing a contract with UAMY as well. If that happens, right, we get both of those boxes checked. I think this is going to be more of a long-term stock, but for now, I'm going to be holding this midterm for some pretty solid gains. So as it is sitting right now on the chart, this actually had a pretty nasty gap down as well. And typically when you've got a gap down followed by immediate green following up on that, which you do see here, we were actually, I think, up on the day. Down a little bit here in the pre-market, about 3%, but we ended the day green. That is a sign of an upcoming reversal. I do think that is a nice bottom out here. We've got one bottom. Honestly, you could call this a George W. You could call this a double bottom. It's an ascending double bottom nonetheless, but it is a bottom. So what are we going to be looking for here in terms of the chart setup? Well, let's just take a quick peek. So we've got this descending level of resistance in which we did end up breaking through. We got a wide range candle bar breaking above that descending level of resistance, which to me indicates that we have officially broken out of this downward channel. And we've got this nice ascending level of support, that nice ascending support line, which should act as a nice level of support here down the road. So I would anticipate this is going to be green. I think it has broken out of this downward channel. I think it is going to start moving in a nice upward direction. We had some nice volume pump into this when that red happened, right? People get the opportunity to get into this stock. And on these red days, you have not seen anywhere near as much volume come out as went in. Look at the volume that came in on this 1 hour window. 28.8 million shares. That's insane. We had 11.3 million here today. So there are people that are taking the opportunity to buy into this when it's red. I'm truly believing that UAMY's time is going to come. I've got 1,050 shares in this. I did end up purchasing some more here today. I bought them at $1.39 for 250 total shares. So I'm up on that initial investment. My dollar cost average is at $1.58. So I decreased my dollar cost average pretty decently. And my friends, my family, I do not think it is too late to get into UAMY. I think I've got some nice upcoming catalysts that could really drive the price action here. If you're looking at a potential entry point, I think a solid entry point is going to be riding that ascending level of support about $1.48. That should treat you pretty well, my friends, and we are looking pretty solid. So the 15 MA parallel with the 200 MA, pretty neutral. That would indicate to me some consolidation upcoming. The RSI is pretty flat, sitting at about 51. Not a lot of risk involved, not looking too bad. Volume, a little bit sporadic. I don't necessarily like the volume. I'd prefer this is more, even Steven. It makes it a little more harder to predict. When you've got consistent volume, you can predict the movements and the volatility, right? With higher volume comes higher volatility, less volume becomes less volatility. But what I do like is that on the days that it was red, we didn't have a lot of volume. So these consolidation days, these red days, I don't mind that there's less volume here. That indicates to me that a lot of people are holding their stock. This isn't a trader stock. This is more of an investor stock, which is good. So I don't mind seeing that. I think that UAMY's got some good things coming for it. For now, I'm going to be holding this in the midterm, and that is what I have for the video today. If you enjoyed it, please drop a like. It really does help support the channel, and consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with a $100 deposit. I receive a free stock. Great way to support the channel, my friends. And if you're not interested, that is totally fine. I just appreciate your support by taking the time to watch my videos. So that is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.